Thanks for joining us. My name is Ibrahim Sani. The recent banking crisis in the United States has further complicated matters for both investors as well as regulators, who are also trying to grasp the persistently inflationary environment and rising interest rates around the world. Of course, we're nearing the hike cycle. We're trying to understand a bit better about the environment on this moving forward. So local investors, especially Malaysia, are speculating about the impact on these kind of developments in the Asian market and the underlying opportunities of what can we ascertain from this volatile situation. Joining me in the studio is Khairi Baki, the Deputy CEO of CGS-CIMB Securities. He's also the Head of Global Sales there. Khairi, again, thanks for taking the time to speak with us. Maybe we can do a quick outlook, I suppose, of the current market situation. And perhaps before we jump to the latest trends, are we really in this situation where it's really that volatile? How do you see, or how does CGS-CIMB see the situation right now?
Okay. Well, at least in Malaysia, we have seen the volatility happen last year as well with the global markets, right? This year, we have been a bit flattish towards a bit negative, but then the global markets that we have seen actually has kind of rebound a bit and forget about whatever happened in 2022 in that sense, and have the earnings last week, for example, you look at the Coca-Cola, Microsoft, Amazon, and these are all global names. They're not just business focused in US, right? They've done pretty well and beat the estimates. So in general, the way we look at it, at least in Malaysia, is kind of like stable. We're still positive on banks, for example, because of the interest rate hikes and everything. But in global, in other markets and the underlying, below the main markets, actually things has been quite positive.
I'd be remiss if I don't ask about the geopolitical issue that's surrounding the globe. I'm not just talking about the Ukraine-Russia war. I'm also talking about the rising tensions in China and Taiwan and the South China Sea and many more. How does this impact the kind of environment that we're looking at right now?
Geopolitical, since last year, the risk has always been there. But I think the way we look at it this year, the market has kind of move a bit and not taking that as a high risk anymore, and they kind of get used to it. And then again, as mentioned, we start to look at earnings, for example. We start to look at the performance, right, of the banks and then the whole economy. And from that angle, I think if things do escalate in the whole China, Taiwan, for example, then there'll be a different view. But other than that, I think that the market has always been like, okay, the geopolitical has always been there, and it was there last year. They look at the risk, but the market has moved on since then.
What about the risk premiums that you attach to these kind of sectors, I suppose? You were talking about the financial sector being a little bit more favorable in your view. What about technology, especially when we talk about technology? We're not just talking about Amazon and Alphabet and the likes, but the semiconductor business as well. And of course, other sectors, perhaps the so-called old-fashioned sectors in construction, for instance, mining. How do you feel these sectors fare right now for this year?
Okay. What I can mention, at least on the tech side, things has a bit choppy in that sense. Like it's very cyclical. But again, I think last week's Intel's number again, on the semicons has improved, still in the negative, but better than expectations. For example, in the likes of the mining and the traditional business. From our point of view, things have been doing quite well. At least in Malaysia, in the last 3 years, at least on our export, we only see the number was negative once last month, and that was because on a high base of last year's. But other than that, we have seen improvements all over. I mean, of course, we're not expecting really high teens number whatsoever. We were looking at our typical Malaysia 4-5%, but it's there. I mean, the growth is still there.
Okay, I'll be asking you a little bit more about how CGS-CIMB plans to work with your clients right now, but we'll jump to that later. I'll still focus on the market situation and what your view is. We're looking at the FOMC with the possibility of raising its interest rates. One would argue that it could be 25 bips.
Yes.
And I don't want to jump into our Bank Negara OPR just yet.
Correct, no problem.
But perhaps you can walk through with us when it comes to the environment of interest rates cycles? Do you feel that we're nearing towards the end of the hikes as opposed to, say, middle of last year or end of last year? And what about the inflationary pressures that is facing not just in the Malaysian market but globally as well? Do you feel that these are the kind of environment that is actually kind of stabilizing right now?
Yeah, definitely. I mean, good word that you mentioned, not stabilizing. It is. Yes, FOMC, still at least, that 25 whether it happens or not. But I think the market has already priced in these things, right? And compared to last year in the situation where there will be a lot more, like it could be 25, could be 50s, and then, on and on and on. But now, I think the talk in the market is like, okay, they're going to be 25 as soon as sometime this week, if I'm not mistaken, right? Then they're gonna kind of like review the whole situation. As you know, they're entering summer as well, so that's another thing before they will review at things probably later back in August or September. So until then, I think there'll be 25 bips and then there's a pause.
I'm sorry, is there significance in summer trading?
Things will slow down a little bit in that
really?
sense, where things are going to be
in Europe and
Europe, yes,
I'm sorry
yeah.
about that. I didn't know.
They always say, sell in May and go away kind of thing.
Oh, okay. Sorry, I'm unfamiliar. Oh, this is okay.
Yeah. But having said that, it's still gonna be, everything's we're gonna closely watch and everything. But I think it's August or September where things, if it's negative, then you see some, market downs a bit before it turns back. And there's always been that kind of a cycle. I mean, at least in the global, not in Malaysia, it's a global market. Yeah.
Okay. We'll go for one short break. When we come back, we'll discuss a bit more with CGS-CIMB. Thanks for staying on with us. I have with me Khairi Baki, of the Deputy CEO of CGS-CIMB, here talking about the market environment. Maybe you can talk to us through how CGS-CIMB plans to work with your clients and how you want to navigate this kind of, I want to say turbulent or volatile. I think these are negative words. I think that the market will always be, in a way, unpredictable to some sense. But there's a way for you guys to navigate this kind of environment with your clients.
Yep.
Maybe you can walk through with us in terms of how you are hand-holding or guiding your clients in terms of trying to find value during these moments.
Okay, when I say clients, there's two sides of it. We have institutional clients as well as our retail. We are very much, driven or invested in our research capabilities. We are known as a research house anyway, across Asia. So we not only we have our presence here in Malaysia, Singapore, Indonesia, Thailand, also in Hong Kong, Korea, and we have our partners, strategic partners, the likes of Raymond James of US, we have Liberum of Europe, and we have Okusan of Japan, and then we have other partners in other parts of the world. So all this research, in total, we have thousands of research reports, so we are very much driven on that.
I don't normally do this, but I'd like to endorse CGS-CIMB research here in Astro as well as on AWANI. We do use your research, not just because of the corporate news that you guys bring, but of course the political news and the economic news as well. And while we're not looking for comprehensive, we're looking for the kind of sampling, I suppose, of global political news and local political news. And that's why we rely on CGS-CIMB research on that one as well.
Thank you.
Yeah. And because of that, how do you see your clients utilizing, I suppose, these kind of CIMB research reports?
So, as I mentioned, on the Insti, they very much use our not just Malaysia regional and the global reports, but on the retail side, we do a lot of hand-holding. We have 30 branches across Malaysia, so we have all our branches and our people on the ground, hand-holding these clients. We do have our regular webinars. Okay, we have our speakers, coming up to these webinars and explain to the people how things are and everything. So we use different forms of channels to deal, to help our clients going through to manage this. And then apart from just, say for example, in Malaysia, the market has been flat. We have the options, look at Hong Kong, look at US, and we have all these research reports. We have all this content that we can share with them. So that is how, we don't really just, okay, Malaysia is not doing well, Malaysia is flat, we can't do anything. No, we have other markets that we can look at, and we also have other products that slowly we're trying to tell people, look, equities is not just equity shares, or stock markets, but there's the likes of CFDs, the likes of options, the likes of futures. Even last year, we started with our first Sharia futures, actually. So that's one of more interesting products
that was
that we have.
the launch, funnily enough. What about REITs? What's your view on REITs?
Okay, REITs has always been a good, returns, right, for steady returns for Malaysia clients. But I think one of with our discussion recently, we should look at Singapore REITs actually for Malaysian investors, because they are more interesting in terms of the yield is higher. And if you go to the ground, if you go to, any Singaporeans, they said the last 12 to 18 months, the rental has increased. This is just on normal properties, 30% up to 100%. So that, kind of translate into the REITs as well, whether it's commercial or, some of the warehouses and all those things, that the REITs will be do quite well.
Very recently, the Singaporean government has announced laws to increase the tax for disposal, especially the tax for Singaporeans on the first property is still 0-0, but when we look at foreigners, it has gone up from 30% to 60%. Do you feel that these kind of laws might not necessarily be promising for Singapore REITs?
Not necessarily. I mean, it helps in the sense of, for them not to do all these speculations and everything. But Singapore has a different situation. I mean, I'm not an expert, but we know there's an influx of the foreigners or influx of the, all these professionals,
PRs,
right? So there's a shortage of properties that has shut up. So in that sense, you're just going to help in the sense that people are not going to speculate or, do a lot of transactions. But in terms of the property itself, in terms of the REITs, I think it's just going to perform very well.
You're the second person to say on this topic positively. The first person was Maybank Investment Group. We were talking at length about Singapore REITs as well. That is an area of opportunity right now.
Yes,
but again,
definitely.
We're trying to make some sort of a sampling here. Around the Asian market, do you feel that the risk and reward is actually quite promising as well when it comes to trying to see what markets are good in what areas? I've spoken about Singapore REITs, Hong Kong equities. Do you feel that China equities might be an interesting element as well? And what about the properties in China? We've seen how some defaults have happened over the past few years, big ones. Do you feel that that risk is still facing an overhang for property market in China?
Okay, unfortunately, China is not really my area, so I'm unable to comment a lot on that. But in general, what I can say when you ask about risk reward, across Asia, right? We are seeing, I mean, since China reopening, right, and we have seen, our counterparts here in Malaysia, and they are interested in across ASEAN for private equity deals, for example. So there's
really?
a lot of interest. Yes, there's a lot of interest there.
I thought that was always been the silver bullet. People are still talking about trying to find value from PE.
Yeah,
but not necessarily. Not many people have good luck in that area.
I think there's two things to look at here. One is that some of companies across ASEAN may not be big enough, some for the global players, for example, right? But I think in the recent years, things have started to change, and as I mentioned, we see our counterparts from the North Asia came down here to look for deals. That means there is something good here, and of course, the local players has always been very vibrant, and in fact, Indonesia. So we talk about Malaysia, we talk about Singapore. Let's talk about Indonesia. It's very, very vibrant there. When it comes to private equities deals, when it comes to all these, startups and everything, it's a different world altogether.
What about Vietnam? Are you bullish about Vietnam as well?
Yes, we do. We are looking at it as a group into Vietnam. We have a partnership there, and I mean, after China, across ASEAN, I think Vietnam, apart from Malaysia, Vietnam will be another place that people have to look at because
it is not my intention to put you in the spot, but generally speaking, I have to ask you this: is Malaysia lagging when it comes to our peers in ASEAN when it comes to investment opportunities, or do you feel that there's some opportunities that still can be had here in this country?
Oh yes, definitely. There's actually a lot of opportunities here, and that's why the people are still coming here. It's just that there are pockets of opportunities, and where you want to look for it. That is the key.
Pray tell, where is the opportunities that might lie?
Okay, one of the areas I must say actually why people love to be here, right, is because of our talent. Okay, that's one thing. There are some of the technology companies are coming down here. I cannot say names, and I just know that there are development also, like some digital platforms, like fintech, for example. They're coming here. Why? Because we have graduates. We can, people speak English. We are good with, our internets are up there.
Wages are low.
Well,
on one side, business owners might be happy about that, but workers might not necessarily be.
Yeah, I mean, when they look around the ASEAN, right, where do they put their so-called their hub, for example, of about? It's small, but I'm just saying, one of the things that I've seen that say about 100 to 200 people, they look at Malaysia as a very better place because first they look at Singapore. It's going to be expensive there, to set up things up there and, people to working there. And then say, look, the next best thing, because Singapore has their issues, especially we will talk about properties now. So they look at Malaysia. This is a fintech company that I know quite well. So, and they are US-based, China-owned, and then they want to set up their hub here because they say we have our programmers here, we have our customer service here, and to set up office is cheap. So there are things that.
What about semicon businesses? I can mention some names, you can't though. Emulus, for instance, Intel, they're doubling down on their growth here in this country. We're looking at Kulim High Tech Park, Penang as well. These are just two companies, but of course the industry itself is actually growing. They're intending to hire thousands of people, and they are progressively hiring. But they too are having a big problem or big headache, I suppose. Not problem, just a headache on trying to fill as much jobs as possible.
Right.
So the semicon sector is that a promising area as well?
Yes, it's very promising. I mean, I don't have the full report, but what I've heard out of there, in the north, when they not left, when they focused on China many years ago, but probably about 15, slightly more than 15 years ago, and then to Vietnam, and then when they came back here, probably about 5 to 7 years ago, they realized our wage has not grown. And the cost of doing business here, I mean, our electricity,
salary, wages, come on, we gotta talk
all
about that.
Yeah, it's still good. So they're like, hey, we should look back at Malaysia and then set up things here because, Penang can provide everything. We have the ports, we have, all the facilities there, and, like I mentioned, some of the good subsidies that we have. So it's interesting how things suddenly like, hey, let's look back at Malaysia and then, set up all these things. So I heard up the north. I mean, I haven't been there for quite a while in terms of, formal visits, but that's something that we should really take a look at closely.
I promised you risk and reward. We were talking about rewards. Let's talk about risk. Where does the risk lie? Not just in Malaysia, but of course ASEAN and perhaps global as well.
Okay. We talked about on the the inflation and interest rate and everything. We think it's going to stop. We don't know yet. I mean, they all look at the numbers. They look at the data later on and they decide things better, right? That's one. And then we keep on talking about the recession is happening, it's not happening. Where is it going and things like that. So those are the risks that's happening. And
what about political risk? There is an election looming in Indonesia, for instance. In Malaysia, political risk, some say it has been abated, some say it's just put on hold, and of course around ASEAN as well. Where does the political risk lie when it comes to political risk premiums here?
I can't touch much on the political side, but in general, all I can say, in general, the political risk is always there. From one year to another, there will be, elections in Malaysia, the elections in Indonesia, and then I think next year, in Singapore, if I'm not mistaken, right? I mean, of course, it's very stable there, but in general, the political risk is always there. There's no really, to say that, this year is going to be bad as compared to last year. It's always going to be there. And it's just that how the market take it, digest the whole information, and then after that, okay, everything has been priced in, let's move on. And I always say, we've seen that cycles again and again, right? So it has never been, like one particular year or one particular area where, okay, this is going to be a high risk or whatsoever. I don't think so.
Okay, we'll go for one short break. When we come back, we'll discuss a little bit more with CGS-CIMB. Thanks for staying on with us. I have with me Khairi Baki, the Deputy CEO of CGS-CIMB. When we preface this interview, there's a lot that we can talk about when it comes to the global situation, local situation, of course ASEAN as well. There's that whole idea of US banks right now facing some sort of turbulent times. When we talk about some upside in this space, it's also quite important to look at the downside as well. Not many people anticipated the collapse of a few banks, not just in the US, but of course in Europe as well. Do you feel that there is a chain reaction when it comes to that impact in other places around the world and in Malaysia? Are Malaysian banks or ASEAN banks actually secured in this?
At least I can speak on our Malaysia banks. We are very well secured, very well capitalized. We're very strong. Our regulators look into this very well. So we have no issue, at least the banks in Malaysia. But on the US side, what I can touch a bit, it happened in 2008, if you remember, during the GFC. And it took the US, a bit of a whirlwind in terms of handling it. But if you look at it this time around, And you look at what happened, Credit Suisse, for example, and how UBS swiftly moved on it. What happened to SVB, and then the most recent one, just over the weekend when JP Morgan bought over, was it First Republic, if I'm not mistaken.
Yeah, that's right.
So you can see the swift action, how it's been auctioned and everything, things just because they have the experience, right? And for JP Morgan, for example, is the same guy who was there in 2008 and doing it again this time around. So they've seen it all. They've done it 15 years ago, and how they need to do it. So they know how to do it. So swiftly things happen, and I guess the risk is always there. There's always possible of worse things that could happen. But look at the reaction of how the European Bank, the UBS, and JP Morgan took care of it very fast, very swiftly, and not much big issue.
What about investor protection and, of course, depositor protection as well? Do you feel that that's well compensated? The FDIC in the US is looking at trying to improve on the insurance coverage, not just of those below 250,000, but more than that. That may also include businesses, mid-sized businesses and the likes. Do you feel that that has to also be looked at for folks in this part of the world, in Malaysia, for instance, where we have PIDM and similar institutions around Asia? Do you feel that that credit protection can also be improved as well moving forward, following what we're seeing now in the US?
Okay. Again, in general, definitely there's always room for improvements. I cannot speak much on PIDM of the Bank Negara, but in general, I mean, there's always room for improvement on these things, and we should really look at all these developed markets, how they handle these things, and we can take a cue from that.
Do you feel that investors are now in the mood for investing in financial services, or do you feel that that mood is still not there yet? In fact, maybe you can give us an idea of what the mood is when it comes to institutional investors and retail investors. They have two different minds, of course. Are they well into this whole notion of knowing what's happening, or are they still in the wait-and-see mode?
Okay. They do know very well, because the information nowadays as compared to as recent as about 10-15 years ago is so different, right? So they are very well informed on what's happening around, and very easy for them to get information. As I mentioned about the webinars, not just on CGS-CIMB, but in the market, things have really changed in the retail space. For example, in the last 5 years, how we have a lot of people who vested their interest in this, and then they can get a lot of information. Okay, when it comes to banks, as I mentioned, Malaysia banks are quite strong and very well to do. You look at these names. I just pick Maybank, for example. Just as an example. They give very good dividends. You're talking about seven. Sometimes depends on it, 7 to 8% kind of yield and things like that. And then we have other names. I think my analyst just mentioned Hong Leong and RHB, for example. So we have very good names that we can continue to invest. But of course, retail has a different view. They want much higher returns. But for Insti, they have no problems.
I think Insti looks at two areas, and correct me if I'm wrong, ROE and of course CI ratio, cost-to-income ratio. And far and large, we're looking at local banks here in Malaysia have healthy numbers when it comes to that. Not the kind of numbers when I was doing banking back a decade ago. ROEs are high teens, or else you're underperforming, but you can't get that realistic kind of a view anymore. And of course, capitalization in Malaysian banks, people go with the notion that it's always naturally well capitalized, fulfilling Basel III requirements and many more. Can this be seen in other markets as well, at least in the markets that CGS operates in? What about the financial institutions in this sector, in this region?
At least Singapore has no issue, as far as I'm concerned. But I can't say much about Indonesia and Thailand. Okay, they may not be as good as Malaysia and Singapore, but from what we know, that they are also doing quite well, especially Indonesia. Look at the economy, how it has grown leaps and bounds in the last 5 to 10 years, right? So, as I say, in general, they're also doing well. I don't, we don't see any risk actually in this sector.
Okay. I hope. Your optimism is shared by the market.
At least in ASEAN, as I can say, I can't speak much on North Asia and other parts of the world, but at least in ASEAN, from what I see, things are doing pretty well actually.
Final comment before we conclude our conversation?
Okay, just in general, I think it's on investment. People say, oh, Malaysia is not doing well. I mean, there are pockets of opportunities. We talk about REITs, we talk about banks. There's also other areas, for example, like tax. It's been doing quite well. I'm not a bit overvalued, but there's still pockets of opportunity there. There's always rooms for growth, there are always areas. If it's not in Malaysia, there are other markets, and that's where CGS, across the region, and we have our partners around the world. That's how we look at things. It's just not about Malaysia, not just about one product, but there are many other products and many other markets to look at.
Fantastic. That was Khairi Baki, the Deputy CEO of CGS-CIMB. He's also the Head of Global Sales there as well. If you want to learn more about this, just head on to astroawani.com. There's plenty of resources that can be found there. My name is Ibrahim Sani. Have a great week ahead, and of course, catch you in the next one.